not be a great dancer, but investors are loving the moves Tesla founder Elon Musk is making. The company's stock price is up to nearly $900, surging 80% in just 5 weeks. Analysts say a host of good news is stoking optimism over the company's future.
Earnings per share, a very popular metric for measuring profitability, that came in well above expectations. It was over 24% above expectations. Revenue was about 5% above expectations. And on top of that, the company then stated that its full-year production guidance for the year ahead of us is going to be at least 500,000 vehicles, which, should they achieve that, that will be somewhere in the region of an increase of about 35% in terms of production.
Investors' attitudes towards the company have seen a seismic shift in just a few months. Back in June, its stock price fell below $200. The Securities and Exchange Commission was probing whether Musk's tweets about the company's finances constituted market manipulation. And US demand for Tesla cars was under threat after Washington began phasing out subsidies on the purchase of electric vehicles. Since then, the company's returned to profitability and begun delivering cars from its newly completed factory in China. Demand from the UK and the EU is expected to rise on the back of government efforts to discourage the use of petrol and diesel vehicles. Investors are also encouraged by the rising profitability of Panasonic, one of the companies working with Tesla on its electric batteries. Yet analysts say none of these developments warrant the phenomenal surge seen in Tesla stock over the past few days.
I think given the extent of the rally that we've seen over the course of the last month or so, we shouldn't expect that to continue too long, and I wouldn't be at all surprised if some investors decide to take some profit and we see some form of retrenchment.
At current prices, Tesla stock is worth 80 times the company's annual earnings. It shows investors are willing to bet on Tesla over the long run, but if the stock's volatile past is any guide, their optimism could soon be tested. Mobin Nasir, TRT World.
Let's get more on this now with Santosh Rao, who's head of research at Manhattan Venture Partners. He joins us from New York. Welcome back to the program, Santosh. Now, I've just been looking at the latest share price for Tesla. It's currently sitting at $755 per share, which is down almost 15% from the 900 plus per share that we just saw earlier in the day. What's going on there?
Yeah, the combination of events are going on. I think the biggest one was the fear of missing out, the FOMO as they say it. I think a lot of hedge funds jumped into this, and there's a whole range of people coming into it. They don't want to miss out on that. But underneath all that, I think Tesla came out, there were a lot more bears than bulls on this stock. It's been a show me story all along, and they've been disappointing. So I think now they came out really with guns blazing, 2 quarters in a row profitable. The Panasonic factory is profitable. They have a venture with them. So I think that's good. China is up and running. The Model Y is getting ready. So I think overall, there is wind behind them. It's growing. It's ahead of itself. I can say that. It's a cult stock. Pretty much, you can say that. And people want to buy this. They're believing in the future. It is the best in electrical cars. It has the most market share. It is ahead of competition. So in all those sense, I think it makes sense to be in the stock. But at what price is the issue? At this point, you don't want to miss out. It's pulled back, which is understandable and healthy too.
Okay, obviously the product they're selling, electric cars, appeals to those who are more environmentally conscious. We saw the UK just yesterday say that they're bringing forward the planned date to phase out fossil-fueled cars. Presumably, I guess the heightened level of awareness around the climate crisis is perhaps helping boost Tesla's stock?
Absolutely, that's behind it. But I can tell you something. I can tell you one thing. Not everybody who's buying a Tesla car is doing it because of the environment. It's just a beautiful car, and it drives well. People love the car, and every time a Tesla sells, I think there's one less BMW selling. So there's a lot of that going on. So I think there is popularity, there's demand, but overall, it plays right into the narrative of environmental consciousness, and this is the perfect car, and they are the leaders. You're seeing all the competitors come on, but they're way behind in terms of electrical, getting the cars into production on a mass scale that Tesla has. So they have a jump start on others. They're doing very well. So let's see how far it goes. But if they continue to deliver and show profits like they did this time, so I think it's onward ahead, for them. So I think right now the wind is behind them. They're doing the right thing. So I think it deserves to trade well. Not at 700, I don't know, 900 is too much, but at a reasonable price, which again is debatable. I mean, you really have to. It's a long-term story. It depends on what you believe in. Near-term fundamentals are weak. You cannot get the multiples that you can compare to at this stage. But if you're really looking for the long term, this is the right stock to be in. Yes.
Now, I guess it's worth thinking about how Tesla compares to the so-called legacy automakers like GM and Ford. They seem to be struggling, but with the recent rally in Tesla stock, it's now worth more than a couple of the big auto giants combined. Do you think that's realistic, given that Tesla really only has a tiny slice of the market right now, whereas the others, I guess, are more pervasive?
Very tiny slice. I mean, they might sell 500,000 this year. The other companies will sell 17 million cars for the full year. So I think there's a huge difference there. So you can tell that it's not about the numbers. It's more about the way the market is going. They're on the right side of the market. Fossil fuel, like you said, is going away. These cars are good. People like it. Millennials like it. I mean, the people who can afford it, of course. Not every millennial can afford it, but it's getting affordable. The $35,000 car is affordable. So it's a good car, but ultimately it's a car. And so I think we have to be realistic. 17 million versus 500,000, and the valuations are it's not in sync. I mean, I grant you that. It's ahead of itself. It's very rich in valuation. So, but if you believe that this is the future and it's going to be a crowded trade going in, so I think you're going to see the stock stay up here. I mean, it's pretty. Everybody wants to get in; they don't want to miss out. And there are estimates out there that say the stock can go up to 2,000, 3,000. So when you believe that logic, it's still early days.
It sure is. Anything could happen. Santosh Rao, we appreciate your analysis as always. Thank you.